Hello, everyone. Welcome. My name is Raul Melendez, and this is Public Finance and Budgeting. For this presentation, I'll be addressing the City of Beaumont, California top three revenue sources, percentage of total revenue by source, assessing city's tax structure, progressivity versus regressivity, and I'll provide you with the conclusion. But before I continue on to the next slide, I just wanted to introduce the 2024 fiscal year, which began in July 1st, 2023, and concluded June 30th, 2024. The information that I'll be providing in this presentation will be obtained from the popular annual financial report. I also want to introduce Finance Director of the City of Beaumont, Jennifer Eustachian. So, top three revenue sources. Number one being sales tax. But before I talk about the details of the sales tax, I wanted to come back a little bit on the popular annual financial report for 2024. I included a table of contents, uh, how it would look, and going to the section where the money came from, page number 9. That's pretty much kind of uh, providing a quick reference as to where we're able to locate the information provided. So the sales tax is came in at number one. And so the popular annual financial report indicates that the sales tax is now the largest revenue source for the general fund. The general fund, the amount of money collected through sales tax is contingent upon dollars spent on goods and services throughout the year. For the fiscal year of 2024, the City of Beaumont's sales tax rate was 7.75%. The sales tax rate is set and imposed at the county level. Fiscal year 2024 saw an increase of $1.6 million from the previous year, an increase of 6.1%. And then also, it's this report indicates that to please note 2022, there was an increase of $18 million from the previous year, an increase of 203%. This was due to the reporting change in the commercial industrial sector. Here we can see the sales tax collected from a 10-year comparison, which showcases that 203% increase in 2022. For the fiscal year ended June 30th, 2024, the city revenues exceeded expenses by uh, $49 million. Sales tax accounts for 23.4% of the city's total revenue. So for revenues, $128,591 million in revenues. Expenses, $79,528 million, and the difference being equivalent to $49 million. And here is a graph for the sales tax, accounted for 23.4% of that total revenue. The second revenue source is fiscal year 2024. Property taxes account for 12.1% of the city's total revenue. And number three, the top three revenue sources is other taxes, which includes transient occupancy tax, utility user tax, franchise fees, and investment income, which accounts for 5.9% of the city's total revenue. Moving on to assessing cities' tax structure, progressivity versus regressivity. Here are the key concepts. Progressive or progressivity uh, refers to higher income households having to pay a larger share of income, whereas regressivity is lower income households pay a larger share of their income. So, Beaumont's California primary dependency source on sales and property tax suggests regressivity for lower income households. Leon and Schwab, 1995, suggests that sales tax are generally regressive. Macmillan and Singh, 2020, suggests that property taxes can be regressive because lower price homes are often assessed at a systematically higher ratio relative to market value than higher price homes, resulting in a disproportionately higher tax burden for owners of lower valued properties. Here, I provided the references for this presentation, and that concludes my presentation. Thank you so much.